Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Friday the 13th, 2026. Well, despite all of the predictions that tariffs would spike inflation, the data came out today lower than expected. Surprised some people, made some people happy, made other people angry. Depends on what side of the political fence you're on. But as we're sitting here almost at 3 p.m., about ready to close, the Dow is basically unchanged. The S&P is basically unchanged as well. The Dow did hit its all-time high ever this week at 50,611. That's on the futures. The S&P 500 hit its all-time high of futures 2 weeks ago at 70.43. We did have today's low did mark about a 2.8% pullback in the Dow, but we've recovered from there. The low was 49,155. We're trading about right about 49, almost 49.5, 49.6 right now. So a recovery there. I would just caution everybody when we're at Dow 50,000, a 5% move, which is just considered noise generally, at least it has been for the last 40 years I've been involved in markets. The 5% was considered noise, right? So 5% of 50,000, it's 2,500 points. Same thing with the S&P 500 at 7,000, 5%. It's, it's not a little bit, it's 500 points, but I would get ready for, at some point here, the people will get tired of saying, the point value. They're going to be more concerned about the percentage value. So I would say this again, anything less than 5% is generally noise. 10% correction on with the Dow at 50,000, that's going to be a chunk. A 20% correction with the Dow at 50,000, it's going to be 10,000 points. That's going to happen one of these days, so get ready for it. And I wish I knew when, but I can tell you that it's out there looming over the horizon. But we are at all-time highs. So would you rather have a 10% correction off of all-time highs or off of 5-year lows? So you have to take the good with the bad, I guess, with these stock indexes. Yes, it's very frustrating, but it's also at the end of the day, it was good economic data. I'm sure, depending on your politics, you may think otherwise, but we have to go with the data, just like in the USDA. Everybody hates the USDA. Everybody's suspect of the data. And at the end of the day, we just have to trade the price. So moving on to the grains for the week. Um, since it's Friday, I'm going to give you the weekly changes. Corn up a penny and a half. After all that noise, we finished here at 431 and 3/4, which for the week is up a penny and a half. For March beans, that was the big mover for the week, up 17 and 3/4 cent. We did hit a 2.5 month high on this bounce today over the weekend. Excuse me, during the week when we hit 1141, we broke all the way down to 22 last night. Came back and finished at 1133 even, down 4 cents on the day, but up 17 and 3/4 on the week. The good performers in the wheat. It's been a while. We needed this, right? Chicago wheat traded up 19 cents on the week. Kansas City wheat finished up 11 1/4 cents for the week. Moving over to the protein complex. Fat cattle for the week up 3.375. That was for the Aprils. The feeder cattle down 1.275 on the week. And the hogs, that was the big loser for the week, down almost 7 cents, down 6.675 for the week. We'll see if that continues next Tuesday. Remember, guys, we are closed Monday. The grains are closed Monday. So we'll be back at it. The outside markets will be open, but the grains will be closed. So on that note, I am going to be posting the private client webinar tonight. I'm just about finishing up right now. It's about 3 o'clock here in Chicago. Look for that. It's about a 20-minute classroom deal where I go through and we break down a lot of the charts. I'm going to kind of dig into the importance of these retracement levels and why we look at them and try and use them. And we'll cover what we did for the week as well. So, all right, guys, thank you very much for listening. If you need help, give me a call, 312-638-8868. Chris Robinson, Robinson Ag Marketing. Have a great weekend. Take care.